Kerry, everybody screams in the middle of the night when they wake up thinking about an IRD audit, but apparently you can actually get some help in your corner.
Yeah, all accountants at the moment are sending out renewal notice for something called Audit Shield Insurance. So this is a voluntary insurance that most accountants all should be offering, where you can actually pay a small premium once a year, and any costs as a result of the audit from accountants, lawyers, tax experts, etc., are covered by that insurance policy.
So literally, it's not actually going to save you if you've been diddling the IRD, but it's going to cover your costs.
Yeah, so if you take a tax position on something, so let's say the most common one at the moment is GST refunds. So you buy a large piece of machinery, IRD ring you up and say, hey, look, we want to have a look at your GST calculations because we're a bit dubious about the refund. You ring your accountant, we lodge the claim, and all the costs from that point on, in terms of us, are covered by that insurer. So you don't have to pay anything while we do all the work with IRD.
That's pretty interesting sort of cover.
It's fantastic. We've probably had in the last 6 months 8 or 9 people had GST refund questions put to them, and they just hand us all the paperwork. We pay it across. It's normally sort of $300-400 by the time you finish the IRD, and the client doesn't have to pay it. The insurer picks up the tab.
That's excellent, because without being silly, a chartered accountant gets listened to by IRD a lot more often and intensely than some individual.
Yeah, and depending on who you're sort of talking to, some IRD people may sort of try and look for other avenues to get you on as well. Whereas an accountant knows you keep them focused on whatever they're doing and just give them what they need.
Now, planning. If I had $1 for every time you said planning, I'd be a rich man.
Yes, well, the one that we're focused on at the moment is our dairy farmers, because obviously they've had the news, the forecast is to go up to 525, which is great news, but we also need to think about what happens if it doesn't go up or if it comes back down. Everything's rosy at the moment, but it's not time to go out and start spending. As a dairy farmer, you need to start looking at keeping your costs where they are and actually looking at reducing your debt.
Because people have got terribly excited.
Yeah, and so they should, because most of them will now be going above that break-even point, which is great news. It gives them that little bit extra, but it's not time to actually go and start spending that money everywhere. We're working with farm advisors and banks, and basically it's a case of staying where you are in terms of your costs and just focusing on what you can do with the extra. And just, if you need to spend a bit of extra money, yes, if it's crucial, but otherwise, just keep it as it is.
I'm thinking it would be a pretty brave or a pretty stupid director of Fonterra to go to an A&P show and hang around, wouldn't it?
Yes, indeed. Yeah, they might have a little bit of trouble.
Yeah, because I mean that's serious. People are concerned about that. The huge profit, while the guys who are doing the work.
Yes, that's come out of not good news. And the day it came out, it broke the news. We had a farmer on the phone saying, "How does this happen? Why am I suffering?" And they're pulling the big dollars. So he said, "Shouldn't I get a share of it?" And
so you said bring Fonterra.
Yeah, basically we said go and have a word to them, because I agree with you. They should have had a share of it.
Absolutely. Now, Kiwisaver.
Yeah, we're still getting a lot of questions about it, especially this time of year where people are looking to employ staff. They're a little bit confused about what happens if you've never had staff and put them on. So some of the key things is obviously, if you take a new staff member on, they're automatically enrolled in Kiwisaver. So you have to start making deductions from their pay, and as an employer, you've got to contribute 3% as well. So that catches a few people out, because they work out a pay rate and then suddenly, it's a bit more expensive because I've got to pay extra now. So that's something to think about. Employee can opt out, so they have between 14 and 56 days to get out of the scheme, but they can't just come and say, look, I don't want to be in it anymore. That's not enough. There's actually a proper form they need to fill out. And if you don't get that form, then you have to keep making those deductions no matter what. Even the employee says no, it's up to them to give you that paperwork.
There are avenues that people can turn to help them, because it is a minefield. I mean, I'm thinking of people like Zero and yourself with the
we do a lot of payroll for people, so we can take them through the process and guide them and give them a bit of a start up on it. Zero's payroll is quite big as well on that. Even IRD, so if you enroll as an employer, they will give you a courtesy call and just say, look, do you want any help? Can we send someone out? And it's a free service, and it's quite handy sometimes just to have them come out and go through what your obligations are.
They're the friendly guys, aren't they?
Yeah, these are the community type officers that are out there. They know exactly what you face as an employer. They're always on the ground with people, and they're not coming to sort of look for other things. They're actually just coming to make sure your job's easy.
Exactly, because it is a minefield. I mean, every time you come in, I'm sitting here and reeling.
Yeah, anything to do with employees is hard, and getting pay is absolutely crucial. Getting that right, because it just opens up all sorts of cans of worms if you go down the wrong track. We've had people where they ring up and say, as a general inquiry, do I actually have to make Kiwisaver deductions? Can I just ignore it? And then, things like, what's the minimum wage rate, what hours they have to work to give them a lunch break, all these sort of things. So it's important you get that advice.
And then you stir into the mixture contractors?
Yeah, you bring those contractors in and you got a whole new sort of thing to think about, because there could be withholding tax to be made from payments to them. But again, there's a lot of sort of rules around that you've got to take into account. So yeah, if you've got contractors, another good time to ring your accountant and just give them, brush up on it.
So what's the easiest way? What's the wand that you wave?
The easiest is just to, first of all, give your accountant a call and say, look, I'm employing staff, what do I need to do? Your accountant knows it all, they can take you through the guide, and then from there it's either they take you into a payroll package to use yourself, or you can use them and do all the pay through them.
Because you've got different things, you've got withholding tax, you've got PAYE, you've got your Kiwisaver,
and then there's student loan, and people can have child support.
Hadn't thought of student loan.
Yeah, so there's all these extras that can come into it, so that's where your accountant can actually take you through all the options you've got to look at.
And you can buy packages?
You can, yes. Yep, there's a lot of them out there. Some are good, some are bad, but
Once again, talk to your chartered accountant,
exactly.
because you're not going to sell me something which isn't going to work with you.
Yeah, we know what works best for people. And it also depends on the level of staff you've got as well, because some are way over the top.
Brilliant. Kerry, thank you very much indeed, as always.